Estate investing show. Good to have everyone here today. We're going to start in just a few minutes. YouTube always sends out the alerts late. But today we're going to be talking about Warren Buffett's 3 rules for investing success. Regardless of what you think about his portfolio or what stocks he holds or how he invests, the guy is a legend and his investment strategy is incredibly valuable. So we're going to be talking about that on the show today. Hope everyone is doing well. Let me see where the chat lingo is here. Let's see. Hey, from Pittsburgh. Good to see you. Hey, Janet. Nice to see you. How hot is it there right now? Hey, guys. 120 degrees. Jeez Louise. Whew. So we're going to start here in just a few moments. Like to let the... Hi, Lindsay. Let all of the YouTube alerts and everything else go out, our email alerts and everything before we get started here. Good morning, Toff. Lovetta. Hey, Lovetta. Montana, my old stomping grounds. I used to live in Helena, Montana. Where in Montana do you live? Oh, Missoula. I know Missoula well. I used to go out there and go to some games with some friends. A friend of mine used to play for, well, I never remember the mascot, the Missoula Grizzlies? I forget. Ooh, nice out there in Washington State. Just waiting for everyone to get here until we get started. Grizzlies, that's right. Man, so many people getting burned today. Stock market. And that's why real estate investing, folks, is at the heart of everything that I do. It's the long-term preservation of wealth. Nothing beats it. Hey, Bill Perdue, good to see you. Choppiness of these markets, all these nerves and questions about inflation, and give me okay. Nightmare Hawk. Yes, it is the best inflation hedge for sure. Without a doubt. All right, guys. So today we're going to talk about a really important topic. 3 rules that separate those who succeed from those who fail. This is at the heart of, should be at the heart of your investing strategy, but it's the heart of what Warren Buffett has done for many, many years. So we're going to talk about that today, his 3 rules. He's got a lot of rules, but these are like really 3 preeminent rules that he uses. All right. Nicole is here. I just saw, hey, there's a new episode of I'll Be Gone in the Dark is back on HBO Max. I love that show, the first season of that. But they kind of tied up the whole show. Like, well, is it a new series? Like a new storyline? No, Nicole would know that. I just got an alert on my Apple TV. There's a new series. I was like, what is going on here? Oh, there's another show that just came back on TV too. What it just came? I loved the first season of it. I can't remember the name of it. Oh, Lupin. Ooh, so good on Netflix, the French show. Second season of Lupin just dropped. Man, these markets are going crazy today. Waiting on, like Fed Chief Jerome Powell saying, hey, look, inflation, it's going to be transitory. We're not talking about tapering yet. Market's actually more robust than we thought it was. We're just going to continue to pump about $120 billion into Wall Street every month right now. We're not going to ease that up for anytime soon. Okay. All right. That's your dollar at work. US dollar. Way to go, Nightmare. All right. Congrats on the marriage. All right, let's do this, shall we? Drop this off here for just a second, then I'll open this up for some Q&A here in a minute. But okay. Welcome in, everyone, to the Real Estate Investing Show. So glad to have you here. Our goal with this show is to help you become a more intelligent real estate investor. But really, at the heart of it is becoming a better investor. And what does it mean to be a good investor? Well, today I want to talk about Warren Buffett's 3 rules, the Oracle of Omaha, right? One of the legendary investor, the head of Berkshire Hathaway. When he says, I look at the value of stocks. I look at the fundamentals of things. If there's things I don't understand, then I just don't buy them. I just don't invest in them. I just can't wrap my head around it. And that was how I got my start in real estate investing. We'll get to his 3 rules here in a second. But, for me, getting started in real estate investing, I just didn't understand the volatility and craziness of the stock market. I just didn't understand how you could invest in a company like Coca-Cola, and then Britney Spears could be like the spokesperson and do something crazy on stage, and the value of the stock in Coca-Cola that you just bought just went skyrocket, plummeted down to earth, right? Like, look at Ronaldo the other day, right? $4 billion in market cap wiped away from Coca-Cola because Ronaldo moved 2 bottles of Coca-Cola off the desk away from him. He said, no sugar. He said, water. And Coke lost $4 billion. Like, you want your retirement tied to that kind of stuff? Makes no sense. So for me, I understood Warren Buffett saying, if I don't understand something, I just don't buy it. And that to me was real estate, right? A tangible asset that I understood. I grew up in a house, so I knew that everyone needs shelter, right? You're either going to rent or you're going to buy. And that made sense to me. So at the heart of everything that I do really comes back to that simplicity of Warren Buffett. But he has 3 rules that really separate those who succeed, and really in life, not just investing, and those who fail. So number 1 on his list, on Warren Buffett's list of investing rules, is to invest in yourself. Number 1. He says, by far the best investment you can make is in yourself. This means never stop learning, never stop growing. This is a step you can make no matter where you are in your investing journey and no matter how much money you have. And Warren Buffett says that one of the keys to success is to go to bed a little smarter every day. Measure your success by your own inner scorecard. Buffett's concept of the inner scorecard is something that he learned from his father, which is really your second step here, measuring your own success. I like to kind of lump those 2 together. Let's lump those 2 together as one, because even though they're 2 different points, by investing in yourself every day, making yourself a little smarter every day, you need to know, like when you wake up in the morning, you can journal a little bit. Take your journal and in the morning, write down what you're thankful for. Like, what did you learn yesterday? And that's how you can measure what you learned every day. First thing in the morning, use Day One. I use Day One on my iPad. That's my favorite journaling app. It's fantastic. It really is one of the best, right? Download that on your iPad, on your iPhone, any smart device. It works on the Mac. If you don't have a Mac, you don't use iOS, then I don't care. Grab a paper journal. And every day, just spend a little time for 5 minutes. Don't try to write a whole novel. Measuring what you're thankful for and what you learned the day before. And you never want to stop learning. So when you're getting started in real estate investing, where do I want to start? I want to start reading books, for instance. How do I get a little smarter? Read Rich Dad, Poor Dad. Start there by Robert Kiyosaki. Okay. Then the next book you should read is Tom Wheelwright's great book on taxes, right? Tax-free wealth. Read that book. Then read Garrett Sutton's great book, The Loopholes of Real Estate Investing. Then read Gary Keller's book, The Millionaire Real Estate Investor. All of these books became the foundation of my real estate investing journey. I can pull little snippets from each of them, and I will right now, right? Robert Kiyosaki, the idea of owning assets that provide cash flow. You don't want to buy the eggs. You want to buy the goose that lays the golden eggs, that every week is consistently producing eggs. That's what I want. I don't want to buy the eggs. So I want to buy assets that produce monthly cash flow. I want to move out of becoming just a simple, stay at or work at home, work for somebody else employee. I'll be taxed at the highest tax level. I learned that from Tom Wheelwright. Move out of that. Move into being an entrepreneur and a business owner. And as Robert teaches you in Rich Dad, Poor Dad, the ultimate is to be a business owner that owns real estate, that invests. It's a business owner so that I get the tax benefits, right? And then I'm an investor, an I. Be an I. Be an I. Business owner and investor. Once you understand that you are then at the highest level of what the government deems as the most marketable and the best tax bracket, right? You're creating jobs. You're investing in the economy, you're building solar farms and wind, you're building properties and housing, and the government rewards you in the tax code. That's just how it works. When you're a W-2 employee, they don't treat you that way. It's not how they treat you. You have to have your own business. Be a business owner that invests. That's how you win. And then Loopholes of Real Estate Investing. Garrett Sutton's great book, right? He's a lawyer. Understanding how the legal framework of setting up your business and your entity, your legal structure, and how to use the loopholes that exist in real estate investing to lower your taxes, but also legally structure yourself so you're protected against your liability protection. And then Gary Keller's Millionaire Real Estate Investor, one of the best books I've ever read. The idea of being focused in one area and buy, own, and hold, his three-step strategy. All of these things I can recount because I know them from these books. Buy, own, and hold, right? When you're starting out in real estate investing, just focus on the buying. Don't worry about so buy, own, and cash flow. Buy, own, and cash flow. You start out at the beginning, just buy it. Okay, we're using other people's money. We're using the bank's money. Let's not worry about the cash flow just yet. It'll come once that mortgage is paid down. But now you're still working. You're making money. You're young. You're still in that phase. You don't need to worry about living off the cash flow just yet. Now you bought it with other people's money. Now as the mortgage gets paid down, you own it. Okay, that's step 2. And then third is the cash flow stage. Now that's when all of those properties you've are paid off. Now the cash flow. Now you're living off the cash flow. And then what does Gary Keller teach us? He teaches us then to buy until you die. Because now that's income, right? All of that money that I'm getting from those properties is income. It's income, and I have to pay taxes on it. Well, how do I mitigate that? Go back to those other books. Tax-free wealth and Loopholes of Real Estate. Buy more properties. As I buy more properties, I depreciate, I offset that income, and that's how it works. So become a little smarter every day. I'm reading a new book on trading right now, just about the psychology and the emotion of investing, about just the broader economics and how we can look at data, but there is emotion tied to the broader market sentiments that are out there. Whether it's in real estate or the stock market or businesses, macro or micro, it doesn't matter. There's still emotion. So I'm reading a new book by Mike Douglas called Trading in the Zone. And just understanding what that's like, the emotion to it. Fascinating, right? So I can become a little smarter every day with this. And then he says, measuring your success is step 2. So what, for us, internally, the inner scorecard, like what Buffett uses, is something he learned from his father. It means aligning your actions and your goals with your values and your beliefs, not someone else's. It does not matter what anyone else does. I will be the first to admit I have suffered from this in my life. I would compare where I was. I still do it. I try not to, but I still do it. And I compare where I'm at in my stage, in my journey, to where someone else is. And it has nothing to do with that person. We all do it. We all fall victim to it. It's just human nature. But I can tell you, you can become far more successful and happier really, when you realize that what that person is doing has nothing to do with you. Joe Rogan had a quote, and I wish I printed it out. I have it saved somewhere. I meant to print this out and laminate it. And he talked about comparison is the poison that destroys happiness. Like comparing yourself to someone else is literally killing yourself. That's what it is. It's a poison because it's meaningless. And I could go on and on. My friend Gary Vaynerchuk saying the same thing. Comparing where you are to someone else is just garbage. There's nothing the same. Life scenario, life situation, nothing. Now, can you learn from someone else? Can you learn from someone else's journey? Sure. You can learn from someone else's mistakes along the way. I hope that I, on this channel, teach you to avoid huge pitfalls, mistakes I've made over the years, so that you don't make those same mistakes. But you still have to experience them yourselves. You still have to go along and understand and it's like what in Good Will Hunting, when he says to Matt Damon's, to Will Hunting's character, he says, that's great that you've read books about the Sistine Chapel, but until you've actually stood there and seen it with your own eyes and smelled it, it's not the same. So you still have to experience it, even though you've read it in a book. A couple of weeks ago, we talked about setting goals. We talked about the importance of creating goals that are customized for you, because if you're measuring your success by someone else's ruler, you will never be satisfied. And this is why we created our Freedom Cheat Sheet. It's so powerful. Go to our website. It's right down here, morrisinvest.com. morrisinvest.com/freedom. Get your free cheat sheet. Okay, it's totally free. It's so powerful because it'll create an endpoint for you. Like where, and it's based on your personal expenses, your personal goals, your personal aspirations, not someone else. There is no point in setting arbitrary goals or chasing success without an endpoint in mind. You have to have goals. You have to know where you're going. If you start a project and it's 10 steps, isn't it helpful if you have a big project, you can create, there's 10 steps, you can break them down. Step 1 is to call this person. Step 2 is step 10 is publish, right? Okay, now I see the progression. Well, if you don't write anything down and you don't know what your goal is, then what are you doing? I love this concept so much of this inner scorecard because it means being authentic and aligning your goals with your why. Your life success should be measured by love is the third step. At the end of the day, what's really important, his third step, are the people in your life. So building in wealth is important, but the biggest legacy that you can leave behind is the values and the love that you instill in other people around you, whether that's your children or other family members, your spouse, it doesn't matter. But I think that that's a great third point to make, because if you're just so focused on making money and you don't step back and realize, like, hey, that train is leaving the station. These kids are not getting younger. And when you have that time, are you truly present with your children and your family? Are you carving out this time to learn about real estate investing and becoming a better investor so that you can spend more valuable time with your family? Because maybe you're driving 2 hours to and from work every day and you'd much rather spend that 2 hours with your family at breakfast instead of having to run out the door, or actually be home for dinner so you can sit with your family and talk about their day, take vacations, enjoy the weekend, not be nervous about money all the time. So understanding that scorecard for your family, understanding how you can make sure that you're taking care of the values that you're leaving behind for these people. At the end of the day, that's what's really important. It should be measured by love. Will people be showing up at your funeral? Will the building be overflowing with people because you were kind and just wanted to help other people and it wasn't always about money? Or will there be 2 people there because, that's the type of environment you lived in, where you were just focused on making money, didn't have friends, didn't have family, didn't have expansive social circle. People are like, yeah, that person was always just like money hungry, always just talked about money. That's it. It's no way to live. So those are Warren Buffett's 3 steps to becoming a well-rounded investor. And he has much deeper analytical stuff that he looks at for becoming an investor. But at the high level, you have to start there. You have to educate yourself. Then you have to have measurable goals. Keep a scorecard. And then 3, you've got to measure everything by love. Your life success should be measured by love. At the end of the day, who are you hugging at night? Is money more important? Are other things more important? Then you maybe need to look in the mirror and recalibrate some things in your life. So I'd love to hear your thoughts about Warren Buffett's 3 steps to becoming a better and well-rounded investor, human being. Drop me some comments below. And I would love to open it up for some Q&A here, just in general, about real estate, anything that's on your mind. Pop up the chat here in a second. We got some, just looking at some housing data and some we've got a housing rise, prices continuing. Investors are continuing to buy a lot of properties right now. Investors are accounting for a huge swath of people who are buying properties in Canada right now. Affordability is really difficult right now. And home prices still hitting record highs, and new data that we just got out today. Home prices hitting a record high. Sales are starting to drop up a little bit. People don't want to buy and sell houses during the summer. They're traveling. The kids are home from school. It's more difficult. So that's why April and March, really two of the hottest months. Let's see. Let's see here. We'd love to know Morris Invest thoughts on an investing side of real estate with the markets bleeding out. Well, when you talk about markets, you know, when I look at, first of all, I look at the stock market, and the stock market is actually showing some really robust signs in the past 24 hours. Bouncing back off that inflation data right now, they're saying, and most analysts think it's going to be transitory, so short-lived. So from a stock perspective, I think the markets are actually fairly bullish, and believe that the second half of the year is going to be pretty strong for Wall Street. Okay, that's one market. Okay, the Dow, NASDAQ, etc. That's one market. Then if we want to look at the US dollar is actually gaining strength right now against the euro and some other areas. And so, you know, there's actually some higher yields happening on that side, and the US dollar is actually improving. And then we have inflation. So we have inflation. We have, you know, we know that the Fed in 2023 is likely to raise interest rates. That's 2 years from now. So right now, unbelievably cheap money right now still to be able to buy a house, buy investment properties. And even going from 3% to 4%, still, it's not going to stop me from buying. Crypto is all over the map right now. What a mess, you know, waiting for Bitcoin to stabilize. So that's a market. We talk about that. But I look at real estate. People need a place to live. It's still the number one, to me, it's the number one way to invest, to preserve wealth long term, without a doubt. Katya wants to know about Trenton, New Jersey. I haven't looked at the data lately in Trenton. I'm just not a fan of New Jersey investing in general, Katya. I mean, it's just not landlord friendly. It literally ticks my box as one of the worst landlord friendly states. Now, I owned 10 properties in New Jersey, and I will never buy properties there again for that very reason. I think it's too onerous from a tax perspective. It's also too onerous from a legal perspective. They're just way better places to invest than why Trenton? You know, is it because you live there? Remember, this is what we teach you on this channel. You don't need, like, the best places to invest are not in your backyard, you know? Roy Williams. Well, yeah, it's incredibly hard. You're up against a lot of institutions right now who, you know, they literally have people on their payroll that's all they do is bid properties. Are you looking to invest like long term, where you can buy rental real estate, where you're not having to deal with, like I said, if you want a full service team, that's what we do. So you don't have to worry about being outbid. Like, Jay, you could book a call with us. Our properties are at market value, that are cash flowing, new construction with a whole team in place, plus financing built in. Like, unless you're looking for deals that you want to renovate yourself and hire contractors and do all that work, we do all that ourselves. So if you're interested, the number's at the bottom. Book a call with us and we'll talk with you, Jay, about it. I'm sorry, Jay. That was Roy's question. I saw Jay then pop up above it. Jay, how do you compare doing a HELOC versus a cash out refi? Is one better with today's low rates, or do both? Yeah, I mean, they're kind of, it depends on the rates. Yeah, I mean, you're just two different financial products, Jay, just considering what's the better financial product at the moment. And I love the HELOC strategy because you're giving yourself a line of credit for 10 years. With a cash out refi, you're not. You're doing a cash out refinance, and that's it. With a HELOC, I can go out and buy other things with that HELOC, right? And so I can use that as a line of credit continually in other areas. So I love the home equity line of credit as a vehicle. Katya says, I'm in Piscataway. Too expensive. Prices in Trenton are affordable. Are you talking about for investing, or I think you said investing, right? Or to live in? Are you saying to live in, or as an investment? Lavetta, we're building about 600 homes this year, so you have nothing to worry about. And yes, we're constantly looking at additional markets. But the beauty is that the areas that we are expanding, and there's still incredible demand for properties in our area. And we're in the best school districts, and we've got a number of years before we have to really worry about, like, okay, how much more do we, because we already are identifying a couple of different markets, and we spend about a year analyzing them. So we're always ahead of the game on that. Lavetta. You bet, Jay. Oh, for investing, Katya. I'm just telling you, unless you want to be a landlord, I mean, it's a full-time job. I think what we teach you on this channel, Katya, is like, to be an entrepreneur, to be a business owner that invests. Do not be an employee. But, what Robert Kiyosaki will teach you in the book, in Rich Dad, Poor Dad, is, of course, the famous chart, right? And let me pull this up here so you can see. See if I can find this. Yeah. So here, mommy. Okay, let me see if I can pull this up. Okay, here we go. Let me show you this on the screen here. This is very, very, very powerful. Roy says, well, let me answer this. Roy says, how can I overcome my concern about trusting your company to have my best interest at heart? Buying a home sight unseen is supposed to be a huge no-no. Hey, Roy, fly and meet our team. Here's the other thing you have to remember, Roy, is that no bank is going to provide a loan on a property without appraising it, walking the property. They are putting their money down for you to buy it. Yeah, you're putting a small down payment, but they're on the hook for it. So not only are they appraising the property, they're walking the property, they're inspecting the property, they're signing off on the property. But even beyond that, fly to town, meet our team. We'll drive you around. Our whole team is there. You can walk through properties. You can see all of our new construction. You can meet the property management team. Go to our website. We have a whole bunch of people who, after the pandemic, just came and saw their properties and came to town and bought their properties. Go to our reviews section on morrisinvest.com. You can see a whole bunch of people who are literally standing in their properties on camera talking about them. So go check that out. So again, get an inspection, third-party inspection. A bank is going to do their own inspection, their own appraisal, and then you can come to, that's how you cross your T's and dot your I's. Hope that helps. Okay, so let's take a look at your screen here, guys. I'll answer some more questions. And Cynthia, yes, we do help with all of that. So again, book a call with us right here at the bottom of the screen if you want. We'll jump on the phone with you for 30 minutes. Okay, so let's take a look at your screen, guys. ESBI. Okay, this is an amazingly powerful, powerful chart. On the left side of your screen is E and S. We do not want to be E or S's. Okay? So Katya, if you maybe you work for somebody else, okay, then you're an employee, right? Then you're in this camp. Okay? But now let's say you become a real estate investor in Trenton and you buy a property. Okay? You're like, now I'm an investor, right? And I'm not singling you out. I'm just using this as an example because this is a really good example you're watching right now, and this is a good way to explain it. Okay. So now you're a real estate investor, but now you're also a property manager and you're going and checking on your property every day. Like if you own stock in Coca-Cola, do you drive to Coca-Cola's headquarters and knock on the door? Hey, just checking here. Just want to see how my stock's doing. I own 10 shares of Coke. Just, you guys making Coke in there? Just want to make sure because I own stock. You guys, security will get you out of there. So anyway, you're an employee, you work for somebody else. You're collecting a W-2 paycheck. Okay, you're trading time for money. You're trading time of your day for cash. And what we want to do is get you to a place where you're not trading time for money, where your money is actually making you money. So now you're an employee, okay? Maybe you buy a property, you're investing, you're self-employed now, okay? So I like the idea that that in the E-Myth, David Gerber's great book, or Michael Gerber's great book, when he talks about the person who owns a bakery, okay, they were working for somebody else for so many years, they saved up some money, and then they opened their own bakery, okay, and they're there every day, and now, like, they're there at 5 a.m., they don't hire other employees because they think no one else can do it as well as I can, and they're in the business every day at the bakery, 5 a.m., 5 a.m. They're also doing their accounting. They're doing the paperwork. They're not even a good accountant. They're not even good at paperwork. So now, are you a business owner? No, you're not. You're self-employed. You're literally maybe in the same position that you were when you were an employee. You're literally in the business all day, every day. And the business is not working for you. You're working for your business. That's E and S, okay? You're an employee or you're self-employed. That's it, okay? And you get a paycheck, and it goes out to pay expenses, and you have no assets. What we want to do is get you to the point over here where you are a business owner, okay? You're in the B's, business owner, okay? Now your business is generating cash flow for you. You also get the tax benefits of owning a business to offset your income. See, over on the left side, the tax code doesn't favor you. On the right side, the tax code favors you. Now, as a business owner, my business every day when I buy office equipment, I run things through the business, I buy cars with the business, all of it. I have expenses for my business, all of that. I get the tax benefits of that. And then the best is when you become an investor. And a business owner that invests is the ultimate, okay? That was my goal, to become a business owner that invests. Because now I get the true tax benefits of becoming an investor. And now my money works for me. Cash flow works for me. So Katya, by owning a property in Trenton that you have to go and babysit because it's in your neck of the woods and you think, oh, it's close, I'm going to go check on it. That's what you still wind up in this self-employed area. Now you're a property manager. And that house that you bought as an investment is you are working for that house. You have to drive there. You have to take tenant rent and all that kind of garbage. You don't want that. You're not a business owner who's an investor. You created another job for yourself to save a little money on property management. I gladly pay 8-10% to property management to take care of my properties and find tenants in my properties. I don't ever want a phone call about property management or finding a tenant. I like to get an email once a year saying, hey, we just reached out to your tenant. They're re-upping their lease. We've done this or whatever. Hey, the tenant on 123 Main Street is not renewing their lease this year. They're moving. We're gonna get the shampooed carpet. We're gonna get in there and do paint touch up. And we also think we can raise the rent $300. So would you like us to market it again? Yes, I would. Thank you. See you next year. That's what you want. Sue Cornell says, is $60,000 enough money? Yeah, I mean, for one of our properties, like a minimum down payment is about $45,000. New construction with a tenant already in place and cash flowing. So that's about 45. And then we have all the financing with the banks on the backside. So we work with 60 different lenders on our team. So Katya, I hope I didn't, I wasn't like singling you out in that way. It was a good example. And I probably don't even know your situation at all. So maybe I just added some flavor in it, but I think it was a good example for all of us to kind of learn a little bit from here. You maybe own 20 properties. I don't know. And so this would just be adding to your portfolio, and you don't ever look at your properties and manage day-to-day crap, and you don't deal with any of that. So you might be way ahead of me. I'm just using it as an example. Most people, when they start out, though, think that they need to start investing in their own backyard. And unless you live in the most landlord-friendly states with the best and most, expansive job growth, low crime, I don't know if you've noticed, but the United States is getting very dangerous. And the amount of mass shootings that are happening on a regular basis are out of control. And so like where we invest is nowhere near that. We're in high job growth, low crime, appreciating areas that are pretty boring. Like we're in West Texas. You know why? Because it's great. It's boring. It's not Vegas. You know, it's not Miami, but it's great for investing because it's consistent and it's recession resistant. It's recession proof in these areas. Again, not sexy. It's not San Francisco. It's not Chicago. It's not Philadelphia. You know, it's boring, consistent, and great family area, great schools, great jobs, great businesses, Fortune 500 businesses. That's where we invest. Awesome, Sue. Looking forward to talking with you. Katya, so not at all. Thank you so much. We'll have to get a property manager because I was thinking of Trenton because I know people there that could take care of it mostly for the prices. Yeah, Katya, throw out a price for me because I know the prices can be alluring, but when you start thinking, oh, this is cheap, I know Trenton. I've done thousands of real estate deals in New Jersey. I know Trenton. I haven't done a lot there. I know the prices. The thing is, you can be allured by some of those prices, but then what you forget is they're priced that way for a reason. And very often you're going to have a more transient tenant. You're not going to have the jobs that you want. The vacancy rate might be higher. The crime might be higher. So what appears nice on paper can actually really come back to bite you in the butt later, because what if you have a vacancy for 3 months in your Trenton property? Because guess what? It happens to be in a higher crime area than people want to live with their kids. Like on our properties, we have a waiting list for tenants because we're in the best school district. Like that's why we buy the land there and build the properties there, because best school districts. And there's going to be a demand for many, many years in those areas. And you're buying a new construction home or whatever with, you know, vaulted ceilings and a lot of land, and tenants stay a long time because of the jobs, the low crime. So you have to, I know it can look sexy on paper. I've had people write to me over the years. They're like, hey, I was just on Zillow and I saw this house. It was $10,000. Should I buy it? I'm like, first of all, I can't give you investment advice, but I can tell you right now, if it's sitting on Zillow, okay, and hasn't already been snapped up by a flipper that's going to actually put money into it and fix it up and flip it, like, why is it sitting on Zillow? And how many days on market has it been sitting there? 300 days on market, and no one's touched it. Now you're going to buy it? Okay. Don't do it. Cynthia, yeah, give us a call. We're happy to help you. Yeah, so Katya, yeah, $20,000. Okay, so let's just unpack that a little bit. I've been here. Okay? So $20,000 for a property. Of course, it needs work, you say. Okay. So now you're buying a property. I'm just throwing, again, I don't know the details. Let's just use this as an example. Okay. Pretend and I'm going to make some stuff up here that might not even be true, but let's just use this as an example. I think this is helpful. In fact, let me actually, I'm going to do this right now on the screen here. Let's go to Trenton, New Jersey. All right, let's see price range here. Max. I'm going to do max 50K. See what we got here. All right. Here we go. Is this the one? Is this the one, Kachi, that you were looking at? Okay. Is this the one that needs work? So, probably not. But let's just use this as an example, okay? So, there's nothing else selling in that area for that amount right now. There's a lot I need to know about this, first of all. Like, what can I get for rent on a 4-bedroom, 2-bath? I got to start there. Then I got to find out, number two, what are the taxes? Then I got to know, how much can I possibly renovate this place for? I mean, it looks like a lot of, structural issues here. Got a sagging roof. Is a foundation crumbling? How much foundation work do I need to do on this? Right? Like, what's happening here? Like, is it this one on the right side of the screen? It's a duplex. The house is caving in. What kind of crime is in this neighborhood? Can I find a good contractor? So now I'm going to buy this for $20,000. Will I get a construction loan? how much will I have to put into this? You probably have to put 80,000 into this on the right side here to fix this thing up easily. New roof in New Jersey with New Jersey prices. So then you're into this, probably into this over $100,000. And then, yeah, let's read this, right? Sold under equitable interest terms. It's boarded up. Home is boarded up. For your safety, you must be shown parts of the house. Please do not go in for your safety. Do not go into the building for your safety. This is an investor special. Fixer. I love that. Investor special. Fixer-upper for a beginner? Are you kidding me? Are you kidding me? For a beginner? This is the kind of crap like that burns people. This is for a beginner? There's a reason there's no other photos. There's one photo. One photo. This is a beginner fixer-upper. Does that look like a beginner home? First of all, let's cut down this tree, okay, that's hanging over the house. That's literally the branches are going through the roof. Okay, then let's find out what structural issues we have here with this, with this brick. Something's sagging here on the property. Okay, what does the basement look like? Then I've got to literally do an entire outside outside replacement of everything, siding, wood siding, everything. A whole roof here needs to be replaced. All the windows are gone. Tens of thousands of dollars for new windows. And back here you can see through this tree, the roof is totally gone. So all of that rain, that New Jersey rain, it rains all the time in New Jersey, heavy thunderstorms. Like, what's living down there? Okay. This thing literally should be torn down. This is a tear down of a home. So this is good. And I know, Katya, this is not the home. Maybe it is. Maybe it is. All I'm just using as an example here that is not a beginner fixer-upper. Like a beginner fixer-upper is literally something that you find that needs new carpet. That's a beginner. Maybe some paint. That's for beginners. I'd much rather have you, I mean, look at all these. Here's 107 days on market. That looks like a steal. 45,000. Oh, it's near a school. Wow. Oh, it's near a school. They did take other pictures, not of the house. Actually, they took two photos. One was a HDR photo and one was not. And then we have a school across the street or nearby. Great. Great. Let's go tour that one. So there's a reason these things are sitting here. 141 days on market. Here's another one, 141 days on market. This one's been on market for 60 days. See, when I used to do real estate investing in New Jersey and would wholesale properties for flippers who were going to spend 9 months renovating a property, it would never wind up on Zillow, nor would it ever wind up on the MLS through a realtor, because these are not deals. Like the moment they hit Zillow, they no longer are a deal. They're a dog. So I just want you to be very careful, Katya, on this kind of crap. Okay? Look for good school districts, smart investments, areas where there's good jobs, low crime, great property management, demand for tenants and properties, demand for rent. Okay. Sorry, Katya. I didn't mean to use an example. I think it was a good example, though, right? I mean, I know that's not the right one, but I think hopefully I'm making my point here, so you get a little understanding of that. Yeah, Sue, that's a great point. Katya, call the local police department. They can give you a view of crime rate for that area, you know? So again, just be very, very careful on that. Someone said no. Oh yeah, Bill said, I think the no on the front of the building says it all. That's right, I didn't even see that. No. Yeah. But hey, I just want you guys to remember that this is a beginner property. This is a beginner fixer-upper. in a rough part of Trenton. Yeah, here's what I want you to do, Katya. In a rough part of Trenton, I want you to pull up, as a cute girl in the afternoon and go in there with your tools and see what kind of trouble happens. And just leave your car unlocked and leave your tools there. I've literally had that happen, not to me, but with one of our contractors in one of our markets years ago, where put their tools in the house, working on a project in a rough area. This was New Jersey. Actually, it was New Jersey. Yeah, this was one of my properties in New Jersey. They busted in and stole all of his tools. You got to be kidding me. So I'm not a New Jersey investing fan. Anyway, any other questions? And that's why we have a full service team. You don't have to do any of this stuff. Any of this stuff. Any other good questions here? I think this was a good example. I think this is a good... Juan asks, if we assume that real estate market will burst or deflate within a year, who's assuming that? Would you be the pro and... what would be the pros and cons of waiting for that to happen as opposed to investing now? Interest rates, price of homes. Well, I'll tell you this. We heard from the Fed, the Federal Reserve, last week and then again today, Fed Chief Jerome Powell speaking, saying that we're not raising interest rates till at least 2023. Okay, so interest rates are going to remain low for at least 2 more years. Now, it could come sooner, but I doubt it. And then there's 2 different real estate markets. There's the retail market, like I'm buying to live in a house, and there's what we do at Morris Invest, which is we study markets for years before we and our team go in and build properties for investments. Totally different. Totally different. So if I personally am looking for a home to buy myself, then that's a whole other personal question you've got to ask with your family and where are you in your stage in life? Do you actually want to pay a mortgage and a huge down payment to live in an asset that's not performing for you rather than renting? That's a whole other question you should ask yourself, right? Or could I take that down payment that I was going to use to buy a house to live in myself and have no cash flow? And now I could buy 2 rental properties or 3 rental properties. And now I have 3 rental properties providing cash flow for me to live. And then I can use that money to live wherever I want and rent a house on the beach if I want to in Malibu because I've got cash flow from these assets. Right? That's this. When you start thinking in that way, why won't this load? Running the new Monterey beta on my Mac, so maybe that's why things are a little... I also have 80 tabs open, so that could be another reason why things are a little slow. So that's when you start thinking like this, right? Okay, wait a second. Most people think this way. I'm an employee, I work for somebody else, I have a W-2 job, I have enough money I can afford. Okay, I've saved up enough money for a down payment, a down payment on a house, I move into a house, I live in a house, it's not a performing asset, I'm paying someone else, I'm paying a bank to live in this property, no cash flow, and I'm only as good as my next paycheck. What happens when I quit? Do I have a 401k? Is that enough for me to live on? That's how most people live, right? That's so quote unquote American dream, which is a lie, right? True American dream would be to be a business owner that invests. So what if you bought properties that produce cash flow for you and you could live wherever you want? Now you're a business owner that invests, right? You're in an entirely different sector. So as an investor in this economy, I'm looking at here's what I'm looking at: job growth, crime. I'm looking at appreciation, taxes, cash flow, landlord friendly, recession resistant, pandemic resistant. And so where we build our properties checks all those boxes, right? Even during a pandemic, cash flow, demand for jobs going up because Fortune 500 companies moving there. So again, there's no such thing as one real estate market. You've got San Francisco that has its own set of issues, totally different than Lubbock, Texas, or Odessa, Texas, right? Totally different. And someone buying a home to live in Boise, Idaho, a hot market to live in as a family, but not to invest. Like I wouldn't be investing there. Doesn't make any sense. Prices are overheated. It doesn't make sense. Great place to grow up and live, but not a good investment strategy place. And so you need to kind of weigh all that. Like, do I want to move to Boise right now? It's $200,000 more expensive than it was just 2 years ago. Maybe not. Maybe we go there and rent for a while. We use our investment properties that we have for us to live in Boise off of our investments. And we go rent a house in Boise. See if we like it. You know, pay $1,800 a month in rent and let the landlord worry about the house. And we'll just rent in Boise. And we'll use our 3 rental properties in Texas to pay for us to live where we want. Oh, and by the way, we also get the tax benefits of doing that. Because now we're business owners that invest. You see the difference? So just things to think about. There's 2 different markets. When you watch CNBC and you see them talking about housing is, you know, slowing down and this and this and that. Like even this Barron's article that I just showed you a minute ago. Like this is Barron's article, sorry. Here we go. No, that's not it. I had it open a minute ago and I can't find it. Yeah, here we go. Sorry. Didn't have a little dingus on the side for me to recognize the home prices hit record high as sales decline for 4th month in a row. Now, this is a financial newspaper, Barron's. But this article has nothing to do with what I do as a real estate investor. This article is about the retail buyer that's calling up Coldwell Banker and saying, I need to find a house, my family and I would like to move. That's that market. This has nothing to do. Like, look, the median sales price of an existing home grew 23% to a record $350. Again, according to the National Association of Realtors. And this, again, is for people to move into a house to live in it. It has nothing to do with what we do. Let's see. Bill Perdue, thanks again for great info. Everyone have a great one. Never want to give up. Wanting to be free, got to go. Thanks, Bill. Great seeing you. Kristen says, I'm working towards that Malibu home. Good for you. Yeah, Juan, I mean, again, there's no crash market. When we look at what happened during 2008, like where we were investing didn't crash. Like you look at the areas that crashed, Vegas, Miami, San Francisco, New York, right? Areas where you have really high price properties, big swings in value. That's not where I invest. We invest in, I want to say boring, but it is boring. Like I love Lubbock. It's beautiful. Great jobs, great people, great food, but it doesn't have the craziness of a San Francisco. You know, like if Twitter decides to like move its headquarters out of San Francisco, then you like left with all of these empty buildings. And, you know, that's the kind of stuff that happens in New York and San Francisco and Portland and other places like that. So I hope that helps. Toff says, I just bought a house in Mountain Home, Idaho, about 40 minutes away from Boise, and houses are way cheaper there. I commute to Boise now. Really? They're that cheaper in Boise than they are in Mountain Home? Huh. You know, my mother-in-law lives in Boise. It's beautiful. I've been there a couple times now, and it's quite nice. But it's you know, it's not an investing place. It's a great place to live, which is why it was. I think in the past 2 years, Boise has been named like the #1 city for families or something, quality of life, etc. If you can get over people packing guns in a Starbucks, then maybe you're fine with it. Anyway, that's neither here nor there. But anyway, thank you guys for a great show. Katya, thank you for letting me. You're our guinea pig today with your example. I know it wasn't your example, but it helped us have a discussion about it. So thank you for that. Thank you, everyone, for subscribing. If you're new here, go ahead and subscribe to the channel. We do these shows weekly, live. Next week, I won't be here. We will be off next week. I'm taking the whole week off. Not going to be online at all. taking the family away for a little vacation. I'm going to try to not touch the computer for a week if I can do that. It'll be the first time, maybe ever, that I've not touched a computer. I'm going to see if I can do that. So I'm going to spend that time reading books and just spending time with the family on our vacation. So again, coming back to the Warren Buffett rule of like, you know, becoming smarter, working towards learning every day, working. Oh, Nicole's on vacation next week as well. Thank you, Lavetta. Thank you, everyone. Thank you, Katya. Thank you, everyone. Much love to all of you. We'll see you guys real soon.